Today, we are strapping in for a high-speed, incredibly insightful tour of the financial technology landscape in Latin America.
Absolutely.
Our focus is Ualá, a company that, started with just a simple plastic card in Argentina and has now, well, it's become a regional financial titan.
It really has.
We've got this dense stack of source material today detailing Ualá's journey and, critically, their very aggressive strategic plans moving into 2026.
And this is more than just a business story.
Oh, much more. This is a case study in how technology is fundamentally, and I mean fundamentally, democratizing financial access across a massive continent.
That's exactly right. Our deep dive mission today is pretty straightforward.
Right.
We need to analyze the specific strategy Ualá used to go from a simple prepaid card to this sophisticated integrated financial ecosystem.
What the industry is calling a super app.
Exactly.
Yeah.
And the crux of the matter is understanding the impact this has on the unbanked and underbanked population across Spanish-speaking Latin America.
And that impact starts with just the staggering scale of the problem they decided to tackle.
It's a huge problem.
The initial challenge Ualá faced was targeting the nearly 50% of the Latin American population that was just locked out of the formal financial system.
Right, either completely unbanked or severely underbanked. So to be a challenger in that market, you had to offer something totally different.
It's not just a business opportunity, it's a social lever, really.
It is. When you think about it, traditional banks often required high minimum balances, complex paperwork, or physical branch visits, all massive friction points.
So Ualá wasn't just competing on price.
No, not at all. They were competing on accessibility, pure and simple.
Okay, let's unpack this. Let's start with the foundation.
Let's do it.
So Ualá was founded in 2017 by Pier Paolo Barbieri, and the beauty of that initial offering was its radical simplicity.
That was the key.
It was a completely free, prepaid MasterCard linked to a mobile app. No fees, no branches, no complex hurdles. It was designed to remove every single barrier.
And that simplicity, it just proved there was this enormous pent-up demand. I mean, the sheer speed of adoption tells the story better than any balance sheet.
What did the numbers say?
We know that in less than 2 years, Ualá issued over 1 million cards.
1 million cards in under 2 years.
That level of rapid adoption just showed that if you offer financial services that are transparent, easy, and digital first, people will flood the system. They proved the market needed solutions that respected people's time and their money.
And that initial success in Argentina was the blueprint, right?
Yeah.
They followed it pretty quickly with regional expansion.
Very quickly. They moved into Mexico in 2020 and then Colombia in 2022.
So they went from being a successful Argentinian startup to a major regional player almost overnight. But I'm still stuck on the strategy. They started as a prepaid card issuer, basically just a payments rail. How did they convince investors and customers that they were going to be this multi-service giant? What was the pivot point?
The real strategic transformation happened between 2022 and 2024. That's when they stopped being just a prepaid card provider.
Okay.
And they executed what we call vertical integration. They understood they needed to own the regulatory and product infrastructure themselves.
Which led to those two pivotal acquisitions.
Exactly. Willow Bank, which was an Argentinian digital bank, and InView, a really robust investment platform.
So if I understand the significance, acquiring Ualá Bank gave them an actual banking license, didn't it?
Yes.
What does owning a full banking license let Ualá do that their pure-play, prepaid rivals just can't?
It gives them immense competitive leverage and control. A banking license lets them hold deposits directly, offer higher margin secured lending products, and crucially, it allows them to offer investment instruments legally and seamlessly.
So without it, they're just a middleman.
They're just partnering with traditional institutions, exactly. By owning the license and the infrastructure, they control the entire customer journey, they cut out third-party costs, and they can roll out new products much, much faster.
What's fascinating here is the sheer speed at which they did all that.
The speed at which they scaled and vertically integrated. This whole strategy, this control over the financial stack, from payments to savings and lending, that's what cemented their unicorn status back in 2021.
So the valuation wasn't just about the number of cards.
No, it was based on the future potential of their integrated system.
And that vertical integration is exactly what allows them to operate this integrated super app model we see today.
Right. It's a digital financial storefront.
The goal is clear. You use one app for everything. And since they have almost no physical infrastructure, their operating costs just plummet.
Which they can then pass on to the customer in the form of low or no fees.
And when you look at the basic services, they're all designed for mass adoption and zero friction. We're talking about a free international prepaid card, instant P2P transfers.
Easy bill payments, mobile recharges.
They even let people collect Social Security payments directly through the app, which pulls a huge segment of users out of those cumbersome old traditional systems.
Now, that raises the essential question for any business built on low-cost access, right?
How do they actually make money?
Exactly. If the transfers and the cards are free, where's the revenue coming from?
It's a classic high-volume strategy.
It is. First, they earn primarily from interchange fees, that tiny percentage charged every time the card gets used.
Yeah.
But the real money, and the key to their 2026 profitability plan, comes from the high-margin products.
Like lending?
Interest income from their expanding lending services and fees from the investment platform, which, thanks to that InView acquisition, offers everything from simple money market funds to buying stocks and bonds.
So it starts as a low-margin utility, sucking in customers, and then it transitions into a high-margin lending and investment platform once that customer is embedded in the ecosystem. It's brilliant.
It really is.
Their brand identity, with that distinctive magenta color, it emphasizes accessibility and transparency, but it's the underlying strategy that really matters most. Here's where it gets really interesting. Let's talk about the specific mechanics of their conclusion strategy. This can't just be good marketing.
Oh no, it has to be a sophisticated technological solution.
And it is.
It absolutely is a technological solution disguised as good marketing. Their marketing, it emphasizes empowerment, and it's a direct, sharp contrast to how people see traditional banks.
As complicated, bureaucratic, expensive gatekeepers.
Exactly. But the mechanics are all data-driven. When you're targeting the unbanked, you can't use traditional credit models.
Because they don't have a credit history.
By definition, they don't.
Yeah.
So Ualá developed a way to build what you could call synthetic credit profiles.
How?
They use non-traditional data, the user's history of paying utility bills through the app, consistent mobile top-ups, transaction patterns on the prepaid card, all of that to establish trust and predict repayment behavior.
So instead of asking for a formal loan history, Ualá uses my daily behavior within their app, like paying my light bill or how often I top up my phone to decide if I'm a responsible borrower.
Precisely.
That's a massive technological leap that traditional banks, stuck with their old systems, simply cannot replicate quickly.
Exactly. That personalization, driven by AI and machine learning, is the engine of their inclusion efforts. It allows them to offer responsible credit to millions who were previously invisible to the financial system. And that technological leap is critical for their next phase.
Which brings us directly to the future. The aggressive 2026 growth plan.
Right.
After pouring all this capital into building the infrastructure and making those key acquisitions, the focus has shifted sharply.
It's now about maturity.
And profitability. They are pushing hard to become profitable in their main markets, Argentina and Mexico.
And that goal of profitability dictates their next moves, especially scaling up lending.
Right. They've spent years collecting all that valuable data on how users spend and pay bills, and now they're leveraging that information to safely expand their offerings of personal loans and credit lines.
This is the moment of truth for them. They've done the heavy lifting of customer acquisition and building that regulatory moat. Now they have to prove the model works as a profitable enterprise.
And we're seeing signals of B2B expansion, too.
Yes. Offering their digital payment infrastructure and lending tools to small and medium-sized businesses, SMEs, is a very logical next step. If they can solve payment friction for SMEs, that's another massive digitally underserved market.
To really gauge their success prospects for 2026, though, we have to look outside the magenta bubble.
You have to.
They are not alone in this space. This is a battle of fintech giants across Latin America.
This is where the competitive landscape analysis becomes absolutely critical. Ualá is operating in a fiercely contested area, and their biggest rivals are massive entities with very different strategic anchors.
Okay, so let's set the baseline. Ualá itself. We know their primary market strength is in Spanish-speaking Latam, Argentina, Mexico, and they're growing in Colombia.
And their key differentiator is that integrated approach.
Yeah.
Payments, savings, investments, through InView, all backed by that own banking license. They're playing the full-stack game.
Then you have Nubank.
An absolute juggernaut. But their strength is primarily centered in Portuguese-speaking Brazil, which is a massive but very distinct market.
And Nubank's core differentiator.
Their sheer scale in Brazil, and historically, their huge focus on the credit card segment.
But Nubank isn't sitting still, are they? We've seen them pushing aggressively into Mexico and Colombia.
They are, and that sets up a direct head-to-head confrontation with Ualá for market share among Spanish-speaking customers. That's where the real friction is happening right now.
And finally, the third behemoth is Mercado Pago.
Who are often overlooked in a pure fintech comparison because they have the ultimate competitive anchor.
They're tied directly to Mercado Libre,
The dominant e-commerce ecosystem across the entire region. Their focus in 2026 is leveraging that massive user base to conquer offline payments and expand their credit offerings.
If we connect this to the bigger picture, what's the strategic insight for Ualá in all this?
The insight is this. Their vertical integration, owning the banking license and the investment platform, is their most important competitive moat.
It stops them from being a single product company.
Exactly. It prevents them from being squeezed by single product rivals. Mercado Pago might win on e-commerce, and Nubank might have more credit cards, but Ualá offers that truly unified, comprehensive digital financial life. They are betting that breadth and integration will win the loyalty game.
So what does this all mean? Ualá successfully navigated its first phase, transforming from just a low-cost access point for the unbanked into a robust, vertically integrated financial ecosystem. Now, the second phase, achieving profitability through high-margin lending and investment products, is well underway.
The core takeaway for you is that the competition among these three giants is rapidly and fundamentally reshaping financial access for hundreds of millions of people in Latin America.
It's a three-way race.
It is. Ualá is pushing lending, Nubank is expanding westward, and Mercado Pago is leveraging its e-commerce anchor to dominate offline payments. It's a genuine technology-driven revolution where the consumer, the previously excluded consumer, wins.
But that leaves a final question.
Yes. And this pursuit of aggressive profitability raises an important question for you, the learner, to consider as you watch this market evolve.
Which is?
What challenges might Ualá face in scaling its personalized, data-driven risk management model for lending? As they push for aggressive profit targets across these highly diverse national economies, Argentina, Mexico, Colombia, they truly maintain the nuance needed to effectively manage risk for millions of first-time borrowers without falling into the traditional traps of high default rates.
A fascinating test.
That delicate balance between inclusion and profitability will be the ultimate test for 2026 and beyond.
A test where data scientists are replacing loan officers. We will certainly be watching. Thank you for sharing these sources and diving deep with us today. Until next time.